check out where we stand with Apple earnings. The stock is up about 6% here, and the move is giving all the FANG stocks a boost in the after-hour session. Apple CEO Tim Cook speaking on the company's conference call. Josh Lipton is at Apple headquarters in Cupertino to tell us what he had to say. Hey, Josh.
Well, Mel, we know Tim Cook has talked a lot about the challenges his company is facing in China, but he started off this call talking about what he thinks is going right in China. Take a listen.
We generated record December quarter services revenue in Greater China, fueled by an amazing ecosystem with over 2.5 million registered iOS developers. We saw very strong results from our wearables business there, with revenues up over 50%. We also continued to grow our total active installed base by adding new customers. In fact, more than 2/3 of all customers in China who bought a Mac or an iPad during the December quarter were purchasing that product for the first time.
Now, there's a lot of talk on this call, Mel, too, obviously about services, and we did get that services gross margin figure, 62.8% for the first time. CFO Luca Maestri is saying that's an increase of 170 basis points sequentially. The very first question on the call, though, actually came from Morgan Stanley's Katie Huberty, and she wanted to know, to her, it looked like that services growth rate had decelerated, at least from recent quarters. Luca Maestri chalking that up, he said, to some foreign exchange headwinds, accounting changes, deceleration in Apple Care. He also pointed out an issue that had impacted the App Store in China. Notably, there was that gaming freeze that we had seen there. Going to hop back on the call, bring you guys more headlines as they come. Back to you.
All right, Josh, thanks. Apple shares up 5.25% now. Let's bring Gene Munster back in. So, Gene, what did you make of the comments so far? The comments so far, Gene, on what Apple said?
You know, we're just getting into the thick of this Q&A, so it's getting juicy here. But the issues are around the services growth. Some of that deceleration has surprised some of the analysts, and so I think Tim Cook did a good job of explaining why that strength can continue. Second is the number of active iPhones, 900 million. That's up, call it 10% year over year. That's better than what investors had been expected. They had thought that that base was essentially flat. So I see some optimism around that. Overall, the tone of the call continues to be that they have the strength to essentially wade through this macro headwind. So encouraging from that perspective.
Gene, can I ask you a housekeeping question, and that is active installed base. If I'm a person with 3 devices, does that active installed base go up by 3, even though it's one person, and my subscriptions to some Apple services may be the same across my devices?
You would account for 3 active install bases in that case. And in terms of subscription revenue per user, it's per account. So it would be 1 account, but 3 active devices.
So how does active installed base give you a better reading on what the services revenue would be?
The bigger the installed base, the more shots on net, essentially. Now, it's not a one-for-one, as you said, because people can add devices but not necessarily add accounts. But in general, a growing installed base is positive. Keep in mind that the miss essentially was on a lot of the new iPhones. So there was the reason why that base grew is that people who had existing iPhones resold those. There's a lot of ways to do that. Apple is one way to do that. And those tend to go into emerging markets and get activated as new accounts. Apple did give a new metric that they've never given, which is 60% of service revenue comes from outside of the U.S. We had expected that number to be 50%. And I think that that's a sign that this essentially this growing active installed base is having a positive effect on services growth, particularly outside of the U.S.
Okay, now, Gene, I cheated, and I looked at what you're grading the quarter, and that would be a B. And growing up in my household, that would actually be a failing mark. So I'm wondering, what is the primary driver for the B grade?
So the B is, in my grading, you miss a quarter, you can't get an A. And I think that you need to take that into context is that there was clearly a miss, unprecedented miss. But I think if you would, there might be a little bit of a footnote to this B in the sense that if you take into the overall macro, things that we've heard from all different companies, I think it's more like an A- type of grade. I think that they did an outstanding job. In particular, something that I mentioned earlier, the idea that a company misses revenue but still has record earnings, I have never seen that. And I think that that's probably a way to kind of think about this as almost 2 grades in this quarter.
All right, Gene, thank you so much for all of your analysis tonight. Gene Munster of Loup Ventures. Guy, do you still stand by your thesis at the beginning of the show that the worst is not behind Apple, given what we've heard on the call so far?
Gene's the best. B,
Yes.
to your point, not a great grade. For me, it was I was doing back handsprings. With that said, the reason why, and Gene can verify this, I think, EPS record quarter, they're buying back a lot of stock. That helps. And their guide for the next quarter, revenue, it suggests year-over-year sequential decline in revenue. And iPhone sales are down 15% year-over-year. I think what the market is telling you, that the move from 225 to here makes it all in the stock. I'm not certain that's the case.
Right. Gross margin, by the way, wasn't stellar either when you look sequentially,
fell-
right? It would
fell
be a
100
decline given their commentary.
Yeah, and so, people are looking for, again, the falling ASPs as being something else to indict the company over. The things that are positive, Guy talked about look, they bought back $12 billion or gave dividends $12 billion in the quarter. That's annualizing. You can do the math, almost $50 billion. That's one of the value drivers for being a shareholder here. The other is that the services revenue in Greater China was record for a difficult quarter. Not bad.